Good morning, traders. It is Friday, the 22nd of April, 2016. It's 8:01 a.m. Chicago time. Hopefully, you can hear me loud and clear. Yesterday, we had to cancel the Trader Bite due to some changes that YouTube had made on their live streaming service, which caused it to be impossible to broadcast. I didn't find those out until the time of the broadcast, unfortunately. This is another trader bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The key news tonight, overnight, is driven by some releases out of Europe. Um, the Europe is got its market composite PMI reading, which came in at 53 for April from 53.1 in March. Expectation was 53.2. In addition to that, most of you have probably heard that Alphabet, the parent company of Google, disappointed yesterday, causing a push down in the stock. On top of that, Microsoft guidance fell short. Earnings came in at 62 cents, missing the 64-cent expectation, and revenue is up only 1.6% to 22.1. So overall, disappointing result. And in addition to that, Starbucks sales were lighter than expected. The coffee maker earned 39 cents per share on revenues of $5 billion, coming in at about 6% a year when analysts expected 6.7% growth. And then Schlumberger, who's about to start their conference call, I believe, has issued negative guidance on the oil industry. Of course, we already knew that. We've seen what oil has done for the last year and a half or so. Anyway, a lot of that's guiding the trade right now. The overall market sentiment is bearish. Crude oil is fairly strong. Crude oil is up 1.78%, up 76 cents to 40, almost $44. The high of the night of the overnight session on crude oil is 43.98, currently trading just 6 to 7 cents below that. The indices overall are lower, with the U.S. Treasury bond almost flat. The Russell's hanging in there, and the U.S. dollar index is up 0.36%. The Dow, S&P, and Bund all trading at yesterday's close. No change there. So, looking at that and looking at what's ahead today, just 15 minutes after the cash open at 8:45 Central, 9:45 Eastern, expecting manufacturing PMI prelim, looking for 52.0 for April, and then at noon we have the Baker Hughes rig count. The prior number was 440. As far as speakers, not seeing anyone coming out with anything significant into today's close. BOE speakers, Carney is expected to speak at 10:05, 11:05 Eastern. So overall, expecting this to be a fairly normal session, so to speak. Let's start out. Since I didn't do a trader bite yesterday, there are no charts to look at from yesterday's trader bite. But instead, I thought in our review segment, I thought I would put out the hypo that I posted before the market. You can see it's at 8:14 a.m., 15 minutes before the open, as a replacement to the video itself. And my primary hypothesis yesterday was the expectation for an open auction in range type open. The market was opening inside of the prior day's range of value, expecting another run towards value area high. Remember, it's not to value area high, it is toward value area high, but looking for ES to begin auctioning lower today. This was for yesterday. And then in another tweet, and again, this is just our review portion, of the Trader Bite. In another tweet, just 2 minutes after that, I posted that I'm looking for the key levels below at 93, 86, and 81 and a quarter for the session. So, in looking at what happened, here's what happened. Here's what the session looked like. There's our open. We're opening in range in value, right in the thick of it. We have an open auction in range right here. This little box right here is the open auction. And then the market makes an attempt higher, doesn't quite push towards that prior day's value, Wednesday's value high, but it's not expected to just go to value high and drop from there. Otherwise, I can just preload uh, my order book with orders and just walk away for the day. That's not how we trade. The expectation is the market is likely to seek out sellers, and it did. It found sellers at 98.50 instead of 99.50, which is the value high, or actually it's 150. And then it turned over and started attacking those levels below. It pushed all the way down to this 82 area, missing its low target of 81 and a quarter by just a few ticks, 3 ticks. So overall, Hypo 1 was in play yesterday. A very a very orderly trading session. This area here was a bit rough. It looked like Hypo 1 was about to get taken out. We took out the prior day by just a tick. We tried again and we're only able to achieve a tick. This gave us a weak low, but you hardly see a 1 tick test get retested and hold. And then it started to push through the mid, and it started to look like so we're heading for Hypo 2, which is to push that new all-time high. And once it rolled over and it started to pull back towards mid, it looked like Hypo 1 was back in play. So with that being done, so that's the review portion. With that being done, we are now in a microcomposite zone, right? So we have broken out. So we moved out of balance. So let's shift this down a little bit. We've moved out of this. Oops. We've moved out of this balance here. Okay. And we have tested the extreme of balance in one day. On Monday, we tested the extreme of balance, pushed through all the way through, and then went to the other side, and then proceeded to gap up, test lower, and continue higher to new all-time highs. And now we're rolling over. So the first thing I need to do here is put up a microcomposite for this region here, since we have rolled over. And it gives us a point of control right at the November monthly high of 2093.50. So that's going to be a key level. 93 has been a key level for the last 2 sessions. 93 came into play on an overnight session 2 nights ago when it showed up as the LVN in between 2 very clear distributions on an overnight session. And now 93 is likely to be our key area above. As we open and start moving down into this overnight low, I'm going to extend this profile all the way out here to encompass the next balance area. And when I do, I end up with a triple distribution profile. Very important to note, a triple distribution profile here with the point of control right at 75.50. We're back and playing with 75.50. So right now the market is sandwiched between 3 key areas, and these areas are the monthly high of November, which is the upper high volume node, the December high, which is 2086, which is this middle node, and then 2075.50, which is the microcomposite point of control and the key target below. We're very, very close to it at 82 and a quarter, but overall, this is how things are shaping up. The auction appears to be very orderly so far. Let's look at the overnight. So the overnight session, the market was extremely orderly and balanced. The market has traded pretty thoroughly. The middle of this range. It's completely balanced here. There's not much we can glean from the overnight session other than the market's very accepting of these prices down here. Yesterday's point of control is at 85.75. The overnight point of control at 85. The market has decided that it has nothing new to price in. It has tested below and has come back into the yesterday's range and is holding steady in there. So the overnight session is telling us that there is no imbalance. There is no imbalance in the overnight inventory. So with that being said, we can conclude that the overnight inventory being balanced means we're likely to have a very tight and choppy open, expecting a pretty choppy open today. Another open auction. We've had open auction after open auction after open auction this past week. Another open auction. The expectation is that it's likely to test below, potentially get down into the 75.50, but then start to move back up to balance off. Yesterday, as I said in the pre-market, the primary idea is that we're likely to start exploring prices lower, which we have. We're likely to continue, but we're moving back towards the key balance below that we've left behind, that we've kind of popped out of on that run on Monday. And the expectation is we open and chop, continue moving lower, potentially find our buyers down here and start to move back up. That's the expectation for today. That's the primary hypothesis. It is Friday, so the expectation is a lot of the action happens earlier in the day, and then it's likely to get very sleepy later in the session. That's the primary hypothesis. The secondary hypothesis is that it's opening right on the edge of yesterday's range, so it's expected to get responsive buying back up towards the 85, 86 areas, finds sellers, and starts moving towards 75.50. And I expect it to get choppy and potentially end up where we start today. We end up with sort of a doji type of candlestick where we're likely to close where we open under the hypo 2 scenario. I'll leave you with those two scenarios. There's 3 and 4, but they're a long shot for today. I'll leave you with you can conclude what those are, what the next two ideas would be for the day. Anyway, our flex levels are up to date. If you're using IRT, just a reminder, flex levels are in full play here. This is a feature, a new feature that's been added recently, and you can automatically get these FT71 levels. These are weekly levels. They're not intended for you to just blindly trade off of, but these levels, when they're updated throughout the day, they're automatically updated on your charts. You'll see the label and the price move around. They're updated about every 5 minutes. If there is a new update, if I send up a new update, and we're currently doing them for ES, NQ, crude oil, and Bund, and then the notes as well. If you put these flex levels on your charts, you'll be able to get these kind of bigger picture levels like you're seeing here. All of these are one level being shown all together. So that's something that's free for you to follow if you have Investor RT. If you don't, you can just grab these levels right off this video by pausing it. Good luck today, and have a great weekend. Remember, it's Friday. Let's not stick our neck out too far so we can have an enjoyable weekend as opposed to dealing with a big loss into the close of the day on what's expected to be a fairly quiet day later in the session. Good luck.